All right, let's talk about today growing $1,000 and trying to take it to $20,000, right? How can you do that? A lot of you have heard me talk about across the channel the 5% rule. That means never risking more than 5% of your account. And there's a purpose and reason why doing so. If you are risking more than that, and some of you may probably risk less than that just to be on the safe side, at some point you're going to incur too much drawdown, or you're going to be taking, let's say you take a few bad setups and then you blow your account. Risking only 5% of your account per trade is going to allow you to preserve capital, moving forward. Even if you take a small loss or you take a full-on hit, you can stop what you're doing that day and then tomorrow trade again. You also need to do this too. I'm going to say this. I recommend minimize the number of trades that you actually get yourself into. I like to trade 1 to 2 setups tops on the day. A lot of people I see across, a lot of internet channels, or just in online itself, they like to trade and spend a lot of time in the market. You need to limit yourself on the amount of time you spend in the market. Maybe an hour to 2 hours a day. Why do you want to sit in front of the charts for a full-on 6, 7, 8, 9 hours a day? I mean, eventually at some point you're going to get burnt out and the market is going to have its hand with you. All the profits you made, you're going to end up losing it. So again, I'm telling you, the 5% rule works even with $1,000 account, and I recommend starting trading the micros. Can you do that? Yes, because with $1,000 trading the Nasdaq futures, for example, most brokers, the margin is $100 per contract to trade, right? So that means you have to have at least $100 to trade, a certain amount of contracts. So if I want to trade, say for example, up to 5 contracts, then I have to have a minimum of $500 in my account. Now, I'm not telling you to put $500 in your account and then start trading 5 contracts. That's not what I'm saying. I'm saying only risk 5% of whatever you put into your account. Again, the margin is $100 per account for the Nasdaq, and most brokers is somewhere between $40 to $50 on the ES. That's the E-mini S&P 500. So if you're using the 5% rule, right, and then we have a $1,000 account and we want to grow it to $20,000, how can we do that? We're not going to be able to do that in 1 month. So that's the thing about trading that you have to understand and put it in your forefront and back front, or the back behind your mind as well. And always remember that you're in the business to compound your account. All right. Compounding leads to, slower growth, but it leads to you becoming profitable and being able to take withdrawals. That's the thing about it, is being able to take withdrawals and deposit them into your checking account. Right. So the thing about this, using the 5% rule, is that if I have $1,000, how much am I actually risking per trade? Only $50, okay? $50, all right? And it rolls from month to month. So the simple math is just like this. If we have a $1,000 account, we'll start by doing that, times 5%, you'll see that as $50, right? Okay? So if we do that each and every day, all right, so that's times 5 days a week, that's $250, times 4 weeks, just say 4 weeks, because they're typically about, on average, 4.3 in a per month in a year. But that's an additional $1,000 if you're able, which is very easy trading the Nasdaq. And I would recommend at least going for like a 1-to-1 maybe, okay? And you could do a 1 to 2, a 1 to 3, in time. I'm not saying that markets are always going to put out and give you that much. But going for a minimum of 1-to-1 on a 5%, using the 5% rule, meaning I'm risking basically $50 to make 50, right? Okay, and you can do that. So at the end of the week, you've started with $1,000, and now you've made $250. Let's say the next week you do that consistently from week to week to week, making a minimum of $50 on the day. You're probably thinking, that's too easy, right? Yeah, it is. That's going to end up giving you $1,000 on the month. Okay, now you started with 1,000 first month, you end it with 1,000, so you basically doubled the size of your account. So now you have $2,000 to do it the next month. The next month you're going to be basically risking 5% of the 2,000 is $100. So we're looking to what? Risk 100 to make 100. Okay, so at the end of the month we'll end up making $2,000. You don't believe me? So let's say this: $2,000 times 5% is what? That's $100 times 5, and then times 4. That's going to give you $2,000 at the end of the second month. So where you started with $1,000, now you have ended up with how much now? $4,000. Okay, so the first month we closed out $2,000 profit. The next month we closed out, we doubled and made another $2,000. So we're starting with $4,000. So into the third month, things really start to kick off from there. So now we have $4,000. Let's just show you this simple math times 5%. Now we can leverage based on 5%, $200. Okay, so with $200, we're risking that amount to make that amount. So that times 5, it's $1,000 times 4, and here you go, $4,000. So again, month 1, month 2, now we're at 4. Now third month, we are able to gross 4, so we doubled the account size again, and now we're up 8 at the end of the third month, if that makes sense, okay? It's all simple math, but it all entails first of all, having a solid trading plan and sticking with your rules. Understand that you have to stick with what you put down on that trading plan, limiting yourself to the number of trades you take and limiting yourself to the amount of drawdown or the amount that you're going to risk or leverage in your account. I'm going to show you a simple strategy that is very easy to do surrounding supply and demand. One strategy is all you need. You don't need an arsenal of 3 and 4 different strategies to mix yourself up from, you get confused trying to say, hey, I know this strategy, but I'm going to give this one a try. You're going to blow your account. So use one strategy and wait for the best setups. The key to being a good trader is really patience, okay? So I'm going to show you, like right here. All you need to do is figure out the direction of the market. Structure is imperative. You've got to understand. If you're a beginner watching this today and you're interested in trading the future markets, please watch some content surrounding market structure. If you don't do it on my channel, watch it somewhere else. But I would recommend that you kind of watch it here on the channel because I go over market structure and a lot of great detail, especially to those who are elite members. And if you're thinking about becoming an elite supporter of the channel, the link is down in the description portion of the video. It's very inexpensive to join, and I thank everyone out there who has joined and supported the channel. What you receive with that are lots and lots of trade breakdown videos. That's where that's the meat. That's the meat and potatoes, the nuts and the bolts. That's where everything is kind of comes together like glue, and you start to understand the actual strategy itself. Because I go over structure, I go over price action, I'm going over the trade setup, so you understand where to take profit and where to place your stop loss. These are setups where I go in and I post it over on our Discord channel. The Discord is free for anyone that wants to join. The link is down in the description. But what you receive by becoming an elite channel supporter are the trade breakdowns, the video playlist, a great detailed video surrounding market structure for anyone that's interested or anyone that's struggling with that concept, all for just $6.99 a month. Just think about how much do you spend on the price of a cup of coffee each day? Okay, for a lot of you, or favorite sandwich that you like to eat on the day. Okay, if you add that up per week, you're probably spending what, 40, 50, 60, maybe some of you $100 if you're eating out after, dining and eating out for lunch every single day. Here's something that could be game changing for only $6.99 a month. Okay, again, 24 to 25 cents on the day. Maybe some of you are spending $5 to $6 on the price of a cup of coffee each day. You do that, just say 5 days a week, $6. That's $30 a week that you're spending just on coffee alone, stopping by Dunkin' Donuts or something like that. I'm just kind of, just putting it out there. But again, you can become an elite supporter by clicking the link down below. Now, there's 2 tiers. Again, the one I just explained is becoming, a basic elite supporter, or you can also step it up and become an ultra elite supporter. Again, you're getting more information. You're getting more content. What are you receiving on top of just the trade breakdowns, the video playlist, and the market structure video? You're also receiving my live recorded trading sessions. Okay, that's where I'm recording my setups. I'm recording throughout the day the trades that I actually take. Again, I'm only taking a max of 1 or 2 trades, and I'm done. But I'm walking you through my mindset as I'm sitting there recording. I'm talking about the structure of the market itself, what I'm looking at, what levels or what zones am I looking at as well to get ready to trade from. Okay, so you may take interest in that because that's very important to be able to understand when someone's trading and being able to see why they took those trades, because I'll walk you through those setups. Okay, but you also receive the market recap videos. Okay, so you receive the trade breakdowns, the video playlist, the live recorded trading sessions, the market structure video, and the market recap videos for $14.99. That equates to like 49 to 50 cents on the day. Again, the link is down in the description for anyone that's interested in becoming supporting the channel, but also receiving all that great information. And it can be very, very, very beneficial for you, especially for someone that's trying to learn how to trade futures the correct way. Now, if we look at this setup right here, this is a beautiful supply setup. I'm going to show you. I always start with the higher time frame. I'm looking at what took place prior to. I'm seeing the market is bullish, and then we start to break structure lower. We're making lows, lower highs, pulling back to this area of high probability supply area. I always start with my higher base chart and mark up a zone there. What I'm trying to say is that those are going to be the best type setups to get or that happen. It's where a zone can be identified on the higher base chart and you start from there by marking it up. We're not taking a trade from the higher time frame chart. We're moving down or scaling down to a lower base chart. For me, I'm trading range base chart, so I'm scaling down to a 24 range chart. That's my entry chart. Not saying you can't trade it from a 5-minute chart, and I'm not saying that range charts are comparable to time-based charts, because they're not. I'm just telling you that I know because some of you trade time-based charts. So maybe you're using like a 60-minute chart and a 5-minute chart. Maybe you see a 60-minute supply zone, and now you're looking for a 5-minute setup within that zone, okay, that you can take a trade from. The reason we want to find, or I like to find setups where I mark up a higher base chart first, and then I scale down to a lower base chart to find a zone, meaning a supply zone on the inside of the higher time frame zone, is to really get into a precise entry point. I don't want to incur a lot of drawdown, okay? So first, I mark up the supply zone on the higher time frame because we're bullish to the downside here. Then I'll move over to my lower time frame chart. Now, the larger box, the blue one, is where I just talked about and showed you that's a major supply zone, or not say a major, but a supply zone on the higher time frame. Okay. Now, if the markets were tracing back to the zone, I'm looking to see, okay, on my 24 range, I'll move down to, is there a supply zone resting on the inside of the higher time frame zone? Yeah, right here. The market made a low, lower high, broke structure lower. We have a supply area right here, aggressive selling, high probability zone. For those that don't know what I'm talking about, when I reference high probability versus low probability, what marks it or makes it that, one or the other. You can go to the homepage, use a little magnifying glass, type in gaps or imbalances, and you'll find some content there where I talk about what makes the difference between a low probability and high probability setup. Now, this is what I like to classify as multi-chart confluence, setting up and marking off supply and demand zones. A simple strategy right here. The market retraces to the higher base zone, supply zone. The market retraces into the zone and it taps into the lower base supply zone. At that point there, I'm looking to go short from this trade setup right here. Simple as that. Multi-chart. The more confluence we have, the better off the trade is going to work more so in our actual favor. Okay. So then I'm also going to show you right quick. Another example here is a demand setup. Okay. So you can see the market's bullish to the upside. I'm on my 120 range chart. Okay, it breaks above this area structure right here. Okay, that's what I like to classify as basically a minor area structure. This is a leg, major high, major low. We have intermediate or minor areas of structure. In between the leg, it breaks above that area right there, pushes up right here, breaks it, immediately comes back, okay, to the zone right here. If I scale down to my lower base chart, the market's coming, as it comes down, it taps into the 120 range demand zone, but I also have a 24 range, high probability demand zone as well, right here. Okay, looking to go long off of there because we have a confluence at this actual level right here. That will make sense. Zone within a zone approach. Higher base markup, lower base markup, waiting for the market to come in or retrace to whether supply or demand to come to the zone and react off the zone or reject it from there. That's all it is, guys. It's a very simple or easy strategy following supply and demand, looking for great setups that you can actually take. Okay, that's how you can grow a $1,000, say small account into $20,000 over a matter of just a few months if you know what you're doing and you pay close attention to structure. Again, I go over in great detail, setup after setup after setup on trades that I take. The ones that I post over in the Discord, I go back into the private community for everyone or for anyone that's interested in becoming an elite member. That's where I go in and break down these trades so that you can look for similar setups. But not only do I break them down in a way so that you can understand what I was looking for, what I was looking at, why I took the trade, and where I took profit and placed my stop loss at, so you understand those type of concepts just as well. Again, the link is down in the description portion of the video. You'll see a link there titled Ultra Elite Supporter. Click on that. You'll have a few tiers that pop up. Again, you could choose either the second one and becoming a basic elite supporter, or the third one, which is the ultra elite supporter. And you'll see outlined there, it's lined out what are the perks and rewards for each one of those tiers. Now, for all those who have not subscribed to the channel already, please take the time, if you don't mind, to go ahead and click that sub button. Make sure to turn your post notifications on so that you don't miss any of the uploaded content here on the channel. I thank everyone that watches the channel, that's been, liking the video content and clicking that thumbs up button. But if you have not done so already and you're watching this video right now, before you jump off, make sure to click that like button for me, that thumbs up. It definitely helps out the channel, pushes the information into the algorithm so it gets out to the groups of people that are in seek of information just like this. Take care, everyone. Have a great rest of your weekend.